there could be a more efficient place where you could be warehousing your savings or your cash flow, or have an efficient vehicle in place as far as your cash flow management if you're an investor.
Hey guys, Matthew Pillmore here. I've got MC Laubscher here with me, the founder and host of the Cashflow Ninja, where he's interviewed well over 500 superstars in the financial world at this point. He himself is an expert on the infinite banking concept, and we are unpacking that really cool debt weapon here again today. And I've done a lot of videos on this channel regarding the infinite banking concept, where you can gradually eliminate banks and the need for their loans. You can get lots of special tax perks because of this. You have liquidity benefits because of this. And it's a fascinating tool. And we were talking on another episode regarding the idea that if you do not have the ability to afford comfortably $10,000 or more per year in order to form and build and sustain your policies, it's probably not a good fit for you quite yet. Now, that number obviously breaks down to, a little under $850 every single month. I wanted to talk about that a little bit more because having done some research on this and having a number of experts share their wisdom regarding this product on our channel, it was my understanding that you could get involved at a lower level if you wanted to. Now, yes. I don't recommend it personally, but I'm just curious why the difference in your information versus theirs. Is that just simply your recommendation, or is that restrictions based on what you have?
No, that would just be my recommendation. After looking at a lot of different case design and so forth, it starts to make sense at that level. You can start actually policies with $300 a month, and children's policies, which at about $100 a month. But just looking at different cases and just in my experience, I would say that if somebody can put away $10,000 per year in an infinite banking policy, there's a couple of great habits that they've built up. So for example, they've learned to pay themselves first, right? They've learned to put away savings, paying themselves first, which is a very, very good habit, just for starters. The second thing is they would, at that stage, have developed an infrastructure. It's just not money that comes into your bank account and now you're just spending it, right? So it's coming into your account, you're paying yourself first, a percentage of your income into another account, and now you're starting to build savings, build up good habits. You have an infrastructure and actually a plan, right? Because it comes into your account, it's moving to a different account, and maybe you have two separate savings accounts, right? For an infrastructure, which one of them could be then fund the infinite banking. So that's why, if someone has all of those good habits in place before, this becomes a viable option for them.
So it's symbolic of fiscal responsibility. Here on this channel, we've talked multiple times on the idea of savings, right? I think savings is a waste of money. Money's sitting there, the banks are benefiting. They're doing very little to reward me and show any gratitude, again, other than the liquidity and the safety and the convenience of the account. But in my case, what I would prefer to do is to take that money and put it towards other income streams, right? I would rather take any money that I would otherwise have tucked away into some form of depository account, and I would prefer to put it into, say, a real estate property, right? So building up from nothing to a point where we've created lots of equity in income streams, would that even be a good fit for somebody like me if I have a lot of cash flow, but I'm not trying to squirrel away money into low yielding savings? Would somebody look at me in your position and go, man, that's really not a great fit? Because there are banks that have criticized me before, right? They say, hey, I want the last 2 months worth of your bank statements. They see that I'm not in the savings business, I'm in the income business.
Right.
I'm in the cash flow business. I want my money to filter out of savings into income, not into expenses and liabilities, obviously, right? Into assets. And I get scrutinized for it, right? It's like, oh, well, you need a certain amount of reserves. And it's almost like they're shaming me because I'm not giving them money to play with and to lend out to other people to earn from, right? And so I'm curious if the insurance side operates in the same way. If they're looking at my tax returns and they're seeing that, wow, okay, there's actually a decent amount of adjusted gross income. He's paying, he's taxed on a lot of money. Can I still make an investment? Does it still demonstrate that same type of behavior that would be needed to say, hey, I'm a good fit for this? Or should I be saving before I'm a fit?
Yeah, so this concept, becoming your own banker, and what this concept does, this concept of a family bank or a business bank, is it's simply a place to warehouse cash. So if you're an investor with different streams of income and different cash flow, this could still be a viable vehicle for you to warehouse your cash. So for myself personally, there's always money flowing through my personal and my business economy, but I have my business and my family bank through my policies. So instead of keeping money in a bank, which there is still about 3 months of living expenses and business expenses in a bank, because you need something that's ATM ready, right? Accessible with an ATM card. The rest of it is simply warehoused in the life insurance policy more efficiently. And it's there because of the guarantees on it, all the other things that we covered in the previous video. It's liquid, it's growing tax-free, and then also it's invisible. So
that's a great point too on that invisibility, because one thing that always struck me as beneficial with this tool is it also doesn't show up on credit.
Right.
It's also not a credit-based tool. So not only is your credit not required in order to start one of these policies and to build it, but if I were to borrow money from my bank, the bank I create and build through insurance, that loan doesn't report to the 3 credit agencies, right?
Does not.
And so it doesn't affect my debt to income ratios. Frankly, I don't even need to really technically apply to get it, to my knowledge. Is that true? So let's say I've got my own policy set up and I've began building my bank, and it's 3, 4, 5 years from now, and I want to take out my own loan in order to go out and say, make an investment. I can even use that as a down payment, right?
Yep.
And so let's say that I need 20% down to buy another property. I found a great deal. I want to borrow from my bank, my personal Matthew Pillmore bank, VIP bank. I'm able to access that money with very little resistance. So, do I have to apply for it in order to get it? What is the process to access the capital? How liquid is it?
There's a guaranteed loan provision. So you basically fill out a one-page sheet, you send it over to the insurance company, and usually between 5 to 7 business days, you should have either a check or a deposit in your bank account.
So much faster than a bank, which is normally going to take weeks, if not a full 30 days or beyond, to get access to the capital. You can get this much sooner. And what are they looking for on that one-page app? What is it that they even want to see?
How much you want and how do you want it, either by check or by ACH.
Okay. So it's very liquid.
It's very, very liquid. And again, I always joke and say, you want something ATM ready. So you want to have money in a bank somewhere that you can access for emergencies through an ATM card, but there could be a more efficient place where you could be warehousing your savings or your cash flow, or have an efficient vehicle in place as far as your cash flow management if you're an investor. Because there's a lot of folks in our network, their money's moving all the time, doing many different things simultaneously. This is just simply a place where the money is flowing to, and they're capturing all of the cash flow that's in their personal and their business economy. Okay.
Well, that helps answer that question, and I appreciate the conservative buffer that you're putting into your recommendations, because I do think that this is for that financially savvier, equipped, sophisticated person before it is for somebody that's been struggling and just really trying to work your way up to that $800 to $1,000 per month net cash flow position. I will say I don't necessarily agree with you on that ATM ready aspect, only because with the debt weapons I have access to, because I don't entirely eliminate, when we talk about gradually eliminating the need for banks, I'm never going to give up access to the tools that I have. Mm-hmm. So for me to continue to leave cash sitting in the bank really doesn't make a lot of sense. I can fight debt with that. I can pay things down and still, within 5 minutes of a couple thumb clicks, put however many thousands or tens of thousands I want directly into my bank that's available now. In fact, I did a video that showcased how liquid even just some of the PLOCs that we access are, where I transferred just a little under $20,000 into the bank and then went down to the bank immediately, and they just gave it to me in cash. All right, so somebody put a comment that 18,000 didn't seem like massive capital, so we're gonna make it an even 50. See? We're going to go talk about this and explain exactly why this is so beneficial for both you and for people like us. So let's go do that. So it's almost the same thing as ATM ready without having to sit money in the bank. And I think this is why I was harshly criticized by one of my haters. Shout out to my haters, about recommending that savings are for, the ignorant. And I think if we can really rely on a lot of these tools that IBC can contribute towards, man, we can really get the best of these guys and truly bully them, which is what we're here to do, guys. So if you want to keep bullying the banks, make sure you're a subscriber to this channel. Make sure you drop a like if you want us to continue to find out more and more about this and other tools. Make sure you check out MC Laubscher's Cashflow Ninja Podcast. And if you want direct access to MC and his team so that you can find out whether or not you're a great candidate for this tool, then please do email ninja@vipfinancialeducation.com. And until we see you on the next video, guys, make it a great day today. Take care.